question of how do you get down payment assistance when you want to buy a house comes up all the time. I talk to people on a regular basis who will say things to me like, I have pretty good credit, I've been renting for a while, I have a good job, and I've been thinking about buying a house for an extended period of time, but I've just not been able to get together a down payment to purchase that house. But I have spoken to people and I've heard on the news and I've heard through friends that there's different down payment assistance programs. And the answer to that is there are down payment assistance programs, but it's not as simple as people will think. So if you're looking for down payment assistance, you first have to understand that those programs are there only to help with the down payment. They don't help with the monthly payment at all. And why that's important is sometimes people think when they're getting a down payment assistance program, it's going to reduce the mortgage payment. And it's not going to reduce the mortgage payment. What it's going to do is going to help you come up with less money to purchase a house. So the different loan programs are VA, FHA, conventional, USDA, and most people that need down payment assistance programs are either going to do FHA or conventional. Now, a typical FHA loan is going to require 3.5%, and a typical conventional loan is going to require between 3 and 5%, depending on what you qualify for. So what you're really talking about is that little bit of money that you need down, that 3.5% for FHA or 3 to 5% for conventional. So when you're looking for down payment assistance, you have to understand that typically the criteria for those programs is going to be slightly higher than just the loan itself. You can qualify for the loan, and if you had money, you wouldn't have to go to the next level. But in most states, what you're going to find is there's a program that will start at a 640 credit score. Now that 640 credit score, let's suppose you're doing an FHA loan, is going to give you the 3.5% down. So hypothetically, if you were buying a $400,000 house, the down payment would be $14,000. So you're looking for a $14,000 down payment assistance. This can come to you either in a loan, and what I mean by a loan, might come to you in a way where they'll give you the money and you'll either not have to make payments while you're in the house and you'll pay it back when you sell or refinance, or they'll give it to you in a program where you make monthly payments and it just comes as a second mortgage that you pay back over time, and when you sell your house, whatever the balance is gets paid off. That is what you see most of the time for people when they're talking about down payment assistance. There is a second thing that comes as a grant where they'll actually give you money in a format of a down payment assistance, and then that grant will be forgiven typically after you've lived in the house for X period of time. You really don't see a lot of grants right now. There was a time where that was really the thing that was going on, and the money that was given is forgiven. But right now, these programs are money that you pay and that you're going to have to pay back. You'll either make payments during the time you have it, or you'll pay it all back in full at the end. So as far as credit score goes, you're going to need, in most cases, a 640 credit score. Some of the programs with a 660 or 680 will allow for a further amount of money or maybe slightly easier qualifications. But once the higher credit score comes into play, then you'll have more available to you. But you can get into the door with a 640. The other thing that most people have to remember is these down payment assistance programs. The first mortgage is typically set by a third party. And what I mean by that, it's not set by the mortgage company. So that mortgage and that interest rate can be slightly higher than the market interest rate. So you need to be prepared to spend a little bit more money than you normally would on that payment because you have to take the rate that that program is offering. Then you have debt ratio requirements. So on a normal conventional loan, you can go up to a 50% debt ratio. On an FHA loan, you can do 55, 56, sometimes even 57%. But when you go to a program, they're going to have a cap on the debt ratio. So you might end up being capped at 45 or 43%. Sometimes they'll go up to 50. And there are a few that go above that, but those rates are going to be higher than the state programs. So you have to make sure that the payment you can qualify for, because you weren't able to save enough money for the down payment. Now, I will tell you this other thing about down payment assistance, and it's an important thing to consider. If you have money, some of the programs are needs tested. And what I mean by that is they'll give you the money, only if you need it. So if you have a substantial amount of money, it might eliminate you from a program. You can't get down payment assistance just because you want it. You have to typically need it. There are some programs that don't have a needs test requirement, but in general, if you have too much money, you're going to be eliminated from the program. The debt ratio is a very important thing too. Like I said, you're going to have to qualify on debt ratio, and sometimes people, they make too little money for a program, or they can in some cases even make too much money. So a lot of the programs will have caps on the top side. But the programs are there, they are available. The way you get them is you start with a lender like myself. You do an application, you tell the person that you want to apply for a loan and you want them to approve you for a down payment assistance program at the same time. If you're with the right lender, they'll give you several different options, and then you can decide what's right for you. And at the end, you can get the house. Sometimes you can get a house at 100% financing. If you can get the seller to pay the closing costs, which is tough in this market, you can in theory get into the house for no money. But at a minimum, you can get the loan portion covered with 100% financing.